I've been asked for 2 or 3 weeks now to provide another outlook for gold, which I'm going to do today, but it's a confusing outlook, I'm sorry to tell you. On the weekly chart, we do have this potential triple top pattern. This really is a very negative pattern in the longer term, but of course it's on the weekly chart. It's formed over the last 3 years, and this is not going to play out in a few days or even a few weeks. We have got quite a volatile market, chopping up and down, and trading on a day-to-day basis is not that easy. If you want to put a short position on and leave it for weeks and months, it might work. But you can see for the last 2 weeks, we've been closing unchanged. So we really are very much lacking direction. In gold for the last 2 weeks, we've been holding for a range. The low last week was 1942. The high is 1987. So we've been holding a range of around $45, just held a sideways channel for 3 years. There is no clear trend that I can follow on the longer term charts. So we have to look at shorter term charts, and we're looking at the daily chart here. Well, actually, if I scrunch this up again, you can see really just this is what's happened in that 3-year channel. The trend lines show it very clearly. We're not going anywhere. So if you're a trend follower, it makes it very difficult. The only trend you've really got to follow is this more recent uptrend. But of course, we had a big correction down to the 38.2% fib, then a recovery. Even the moving averages are getting confused now. They're flatlining, as you can see. If you told me I had to put a position on now, I had to either sell it or buy it, I really wouldn't know what to do. Today we could be up around the 1985, 1988 area, or we could be back down around the 1945 area. I really don't have a clue. Not very helpful. Let's have a look at the shorter term charts to see if we can get any trade ideas for this week. We're certainly in a short-term downtrend for the last week or two of July. We turned around on the 20th. We've got a 1-week bear trend, a large bear flag there. Possibly this is another bear flag, so it's possible we will break to the downside. Let me put a trend line on there so we know where we need to break for a move to the downside. So yeah, look, we've got some short-term support around the 1958, 1956 area. Now I could argue that this is a neckline to a very clear head and shoulders pattern. That's the left shoulder, there's the head, there's the taller right shoulder, which was severely penetrated by this collapse that we saw on Thursday. Recovery on Friday has taken us above the neckline. So this is confusing at the moment. The 100-hour moving average and the 50% fib has held the bounce back. So now it is a question of, do we hold above 1955 or do we go back down below it? Below 1955 would be more negative, and it would suggest that the head and shoulders pattern could play out. Let's see what the measured target for that would be. Give the head to the neckline is about 35 points. So if we start breaking below 1955, the measured target could be as low as 1920. That would mean we'd have to break the 500-hour moving average, which worked as a support level last week. It comes in at 1947 right now. So we start breaking below the 500-hour moving average. That would add pressure to the downside. We start breaking below last week's low at 1942. That would add pressure to the downside, and it would suggest that we're going to go down to that 1930 level. Right now, the bulls, I feel, are in control as long as we hold above 1958. Obviously, if we get through Friday's recovery high of 1963, that would be more positive. A break above 1967 beats the short-term 61.8% fib retracement and beats the 200-hour moving average. So that would certainly be a lot more positive. So if you're a bull, if you want to see gold higher, you really need to see gold up through 1968 to feel more confident this week, and that's only about 10 points away, so it's not out of the question. If you're a bear, you want to see it below 1957. A bull, you want to see it above 1968. Anywhere in the middle, I'm not really sure what to do with it. That's all I can say on gold. A little bit worrying for the outlook for inflation is that energy does look quite strong, and it does look like energy's in a good recovery phase. I've talked about oil going higher for quite a long time. It's been a struggle to run a long position, I will admit, but look, we've broken up through the 50, the 100 and the 200-day moving averages. We're getting overbought on the daily chart, but that's nothing to worry about. We can stay overbought for a significant period of time. We've gone up now through the 23.6% fib, so that's looking good. We've broken above these two trend lines. So it is looking like oil can start to accelerate to the top side. It's really taken longer than I expected for us to break higher. Getting through that 200-day moving average does seem quite significant. Nice green candle on that. Again, we paused as we broke above that trend line, which is now acting as a support level. So look, maybe we can get up to 84.00, 84.50 this week. Maybe we can accelerate. That would give us a nice 350 to 400 tick gain. To show you the weekly chart, this is why I got so bullish about oil. We had something of a double bottom down here at the 38.2% fib. Do you remember me suggesting longs down here? Because we had the 200, the 500 week moving average, it's a 38.2% fib, a double bottom there. This was why I was suggesting getting long oil. We had this consolidation above the 200 week moving average. It took weeks for oil to start to move higher, but it has now. 1, 2, 3, 4, 5 weeks of rallies, just breaking above this trend line here that I have on the weekly chart. I think this can accelerate, and that could cause problems for inflation, just as inflation appears to be getting under control. So definitely, whether you're trading oil or not, it's worth keeping an eye on it just as an indicator for the outlook for inflation. Okay, that's it for me for gold and oil this week. Thanks for joining me. Finish off by telling you that I'm spending August recording a 5-day challenge that deals with the psychology of trading. A lot of traders, I've realized, spend a lot of time searching for that holy grail strategy, which is going to work in all conditions, week in, week out, keep making them profits. I've had people come to me saying, oh, my strategy was working for, X amount of weeks and now it's not working anymore. Well, I'm afraid that is the way things work because markets change, conditions change. If you really want to master trading, you've got to master yourself. You've got to master the psychological side of trading. And that's something I'm going to deal with in my free 5-day challenge. If you want to be notified when this challenge is released, then please join my Telegram group, the link for which is in the description box below.